I'm explaining task 3.43 in the New Era Accounting textbook, but just the investing activities. So when we look at the investing activities, we look at the non-current assets. We want to know what is the amount of assets that we bought and what is the amount of assets that we sold. So that's our information there. Now, if the amount is at cost price, I can literally just take the difference between the last year and this year of land and buildings, because there is no depreciation on land and buildings. If we have more assets like equipment and they tell us it's at cost, we could have taken just that difference if that was the only information given to us, if nothing was bought or sold equipment-wise. So let's just have a look if that's the case. If we go down, we see there's more information with regards to equipment. Equipment was sold at book value, 18,000. And then they tell us that the cost price was 29 and the depreciation on this equipment was 11. But there's also depreciation given to us there. And now we need to go to the calculation to see what do we fill in to calculate what was the equipment maybe that was bought. To do that, we're going to use this format. We are trying to find this information for the cash flow statement, the investing activities, but we are going to use the calculation of assets purchased and or sold. So let's start with the book value. That means that's the carrying value, or it means it's the cost minus accumulated depreciation at the beginning. And we are concentrating only on equipment because as we said, the land and buildings is at cost, and we could just deduct the two from the other, the one from the other. Equipment at cost at the beginning is 640,000, and the accumulated depreciation is 140. Because remember, we are looking for the carrying value. So here at the beginning, we're going to say it is the 640,000 minus the accumulated depreciation of 140,000 in order to write down the actual carrying value of this equipment at the beginning, and that is 500,000. Right, now we move on to the equipment that was purchased. Now they didn't give it to me, so I'm just going to leave that for now. I don't know what it is. Then minus the book value of the assets sold. The book value of the assets sold was also given to me. It is here where they say the book value, it was sold at book value 18,000. So that was given to me. I don't have to work that out. The book value minus the book value of the equipment that was sold. The depreciation must now be the depreciation that was given to me not only on the sold item, but the depreciation given to me here in my extract from the statement of comprehensive income, because we are working with all the equipment, and we have minus the depreciation. And then the book value at the end. And again, book value, remember they've given us cost and they've given us accumulated depreciation. Let's just see if we can see that. They've given us the cost and they've given us the accumulated depreciation. And we are looking for the accumulated depreciation, for the book value at the end of the year. So what we have here is we're going to take the cost price, 789,000, and we're going to minus the 209,000 accumulated depreciation to get the 580,000 book value at the end of the year. And now you will see that's the only amount that is missing, and that is our balancing figure. So let's just calculate that upwards. So we will say 580,000. Do the opposite, plus 80,000 plus 18,000 minus the 500,000 leaves us with 178,000 that was purchased. Also remember that here we have add the equipment and we have minus the sold item. But when we go to our cash flow statement, we look at the purchase of the non-current assets, and the purchase here for equipment is 178,000. But please, this is at cost. Can you see the equipment at cost is 178,000. So now we are also looking at the land and buildings difference at cost. And the land and buildings difference, I just want to write it down, is 3,148,000 minus the 312,000. And now we have cost here and we have cost here. We have to work with both of them in cost. And that answer is the 206,000, but that is the purchase, so it's minus 206,000 that was purchased. And then we have the proceeds from the sale of a non-current asset. Did we sell anything? Book value of the asset sold, and the asset that was sold is 18,000, but that was an inflow of cash when we sold it. So the cash flow from investing activities is then minus 188,000. And that is how you calculate your investing activities in activity 3.43.